We're going to be at OPEC next week. And when we speak to the ministers, there is a viewpoint, and I'm not speaking for all of them, but there is a viewpoint. And they've said it to me directly to my face. They believe the Permian oil boom is going to be temporary, that we're going to drain the oil faster than we think, and that they're going to go back to being in charge, if you will. What do you think of that argument?
I think they tell it to themselves so they feel better about what's happening. But the reality is we have a much lower cost. We make money at $40 oil. They make money at $85 oil. And you know that cost advantage is fantastic. We were talking in February. We mentioned that one of the constraints on increased production there was the pipeline. So
no way to get the oil out. Can't pump more if there's nowhere to put it.
But now we've got 3 pipelines opening this year, 3 more opening next year. So it's looking worse. And I think if they're going to tell themselves that, they're going to have to repeat it several times to make themselves feel better.
Yeah, and we've got something coming up tomorrow ahead of OPEC. But one of the reasons, and we're going to highlight this, one of the reasons that my sources say that oil has not moved much higher on these Iran tensions and everything else is just that, you know, you got 12.5 to maybe 13 million barrels a day of U.S. oil that is largely geopolitically risk-free.
And the pipelines bring it now to the ports. The ports are ready to go with it. So you've got the advantage of cost. You've got the advantage of cheaper capital. You've got the advantage of better logistics. So I think the United States is in a much better position. The Permian Basin has plenty of oil for years and years. The constraint now, we talked about the constraint in February being the pipelines. The constraint now might be it's hard to raise money for these firms.
So you read my mind or my notes, because the Permian Basin has a lot of oil. What else it has is a lot of debt.
Right.
Is debt the biggest threat to the U.S. oil boom?
Debt and the oil companies themselves, right? So oil companies as a whole remind me of airlines. Airlines for years and years and years just didn't make money, and every 4 or 5 years they go bankrupt. Too many entrants. There'd be an attractive route. Many airlines would enter, the prices would come down. Feels like this to me, where the oil.
I'm going to lose money on every barrel, but I'll make it up in volume.
I'll make it up in volume. So there's been a lack of discipline in capital and how capital is deployed here. But we're starting to see the banks pull back. The Fed is getting tighter with regulations on bank lending to these guys. So these guys have taken in $200 billion in capital and lost $250. So it's a business that hasn't made money. That's a constraint. But the fact that they're able to raise less money from Wall Street, just half of what they raised the year before, the fact that the banks are coming down a little bit more actually is better for the longer term.
Aren't we aligned with OPEC in some ways? The Saudis, we know, would like higher prices. Right? They want mid-80s to fund their sort of their government, their social programs. Higher prices. Ironically, we might want higher prices as well. Not $100 a barrel, because then gasoline prices go up and the consumer gets crushed. But I'm sure the Permian players wouldn't mind 70 a barrel. They make a little money, right? Everyone makes a little money.
70 would be terrific, because
gas prices aren't out of control.
Gas prices would be below 3.25, and we would get a lot more CapEx. CapEx is so important to the economy, and a lot of CapEx is energy CapEx.